All right, Ripple XRP holders. So we're going to get into the XRP, the US dollar price chart. What is causing this 35% rally with XRP sitting upwards of 71 cents? How much higher are we going in the short term? Where are we going in the long term? Ripple is announcing the approval of XRP's use over in Dubai to bridge the oil money, XRP spiking 10% right here, and then XRP spiking over 20%, then over 30%. Whales are responsible for this. So which whales? Where are they buying? And also, what's happening with the settlement with the SEC? What's the amount going to be? And then we're talking about sizing up the Bitcoin ETF opportunity. How much money will this cause into the crypto space? With all these institutions dumping in billions of dollars right now, and Hong Kong is allowing spot crypto ETFs. Is that going to happen? We'll talk about it in this video. So China doesn't want to miss out. The United States is starting to realize that not only are they falling behind, but they need to get a move on it right now with regulation. And what we're seeing right now is the one altcoin that has regulatory clarity is up over 20% in the past 7 days. And then other projects like Cardano up 19%, Solana up 14%, Chainlink up 12%. And so which project will be the #1 project for this bull run? I'll let you guys decide that in the comments below. But by the end of this video, I'm going to be talking about some other industries and a strategy that I'm leveraging to turn $10,000 into over $10 million. My plan for altcoins this year all the way to 2025. So comment 777 if you're feeling blessed, comment 777 if you're feeling bullish, and let's run it. All right, bull runners, welcome back to the channel. So virtually every single day, we've been cranking out videos talking about not only just XRP, but the news, technical and fundamental analysis of what's happening in this space and what you need to be doing to prepare. Because with XRP sitting at $38 billion market cap, you know, this project is drastically undervalued in comparison to the total liquidity that's out there in other markets that are going to be flowing into the crypto space over the next few years. So when we look at the XRP to the US dollar price chart during the last bull run for 2021, XRP peaked out at just shy of almost $2, $1.90 something cents. And then we saw XRP see a sell-off. So all of this volume came in post-lawsuit when XRP went from 20 cents, almost $2 because of China, because of Dubai, because of Asia, because of other countries that had XRP still listed. And so these massive institutions were scooping it up during that bull run, knowing that this project was going to perform well for the next bull run. Even though it didn't pass its all-time high, now there is no boot on the car, so to speak, and XRP is free to run. So what we see right here is when XRP, fell off a shelf with FTX, Terra Luna, Celsius, Voyager, all these bankruptcies happening, XRP went from 90 cents all the way down to 29 cents, bottomed out. And we just see this upward trending support line right here where XRP has just been trending higher and higher and higher. We see higher lows forming since summer of 2022, which is bullish because similar to Chainlink, I talked about in a previous video where Chainlink had months and months and months of consolidating sideways, and now we see Chainlink breaking out. We see the same thing happening with XRP. And so on the right-hand side of the screen, we saw 500 days of this consolidation period from XRP dropping from the high of June of 2019 at about 50 cents all the way down to the COVID low of 10 cents. But then it accumulated sideways during this consolidation phase for 500 days. And then we saw a period right here where XRP broke out from, June all the way upwards of August to about 34 cents and saw 111 days of consolidation for this rounded bottom formation that you can see on the right-hand side of the screen. So we see this rounded bottom formation. And when XRP came back up to test this resistance, it just blasted right through it as liquidity was flowing into this project. So what we're seeing right now, I talked about this in a previous video, and it's playing out somewhat similar. The real question is, if we break through this resistance of 90 plus cents that XRP has struggled to break out for over 685 days. And so, like I said in a previous video, we saw a double bottom trend reversal right here where we see bottom #1, bottom #2. We see this neckline, which is about 55, 56 cents right here. This has been like the Berlin Wall that XRP has struggled to break through. And we broke through it. Not only have we held it, but we're sitting at 70 cents right now. So this is bullish news. If Bitcoin stays bullish and we see good news popping out about the ETFs that I'm going to be talking about in this video, so that's why you want to watch all the way to the end, then we could see something similar play out right here after the 111-day period where XRP exploded. And then we saw XRP, from the low of September all the way up here, it was a 250% rally. So if we were to measure from the low of, let's just say after lawsuit right here, the good news, 17th of August, right? The good news came out and XRP still dropped down to 42 cents. So all the way up, the region to watch for is the high of 2021. So that would be anywhere between 200, actually about 300%, all the way upwards of 350% for XRP. So could that happen? And is it realistic to be able to turn $10,000 into $1 million or $10 million? Obviously, there's a lot of hopium out there in the markets right now, and I want to give you guys a grounded approach on what to expect, because right now we're seeing this similar rounded bottom formation form for XRP. Since XRP was declared not a security, good news happened, but then obviously it couldn't maintain that momentum as Bitcoin was seeing a sell-off, and we're seeing this rounded bottom. And so if XRP springs, this project has been known to rally quick, because the longer the accumulation period where XRP has stayed within this range right here, the quicker the breakouts. As we see in 2017 or 2017, we go all the way back here, from the high of May of 2017, XRP was in this range for 200 days before rallying up. And even before then, we saw how long XRP was in this consolidation phase right here, from even this high until the breakout was 839 days. And so the fact, this is actually good news that XRP has been, uptrending since June of 2022 and in this range for 685 days compared to 500 days. So the explosive move to the upside could potentially be even higher than $1.90. We could go, man, it's anything's plausible for what could happen with XRP compared to how quick this project rallies, because whales come in, they buy up this project, and all of a sudden we see like 50% in 24 to 48 hours. So you just have to be ready. Now, again, there's no guarantee that this is going to happen for XRP. I'm not guaranteeing that you're going to turn $10,000 into $10 million. In fact, I'm actually share why that might not be possible and a strategy that I'm applying into this space to have diversified risk, because I'm not emotionally attached to this project. What I am attached to is blockchain technology. It's the future, right? Bitcoin has outperformed every single major asset in 2023. You look at the NASDAQ, the S&P 500, gold, oil, silver, bonds, Bitcoin drastically outperforming all of them. And that leads to altcoins, which leads to XRP. Someone just bought another $1 billion of XRP, the fourth buy over $500 million in the last 7 days before 8 a.m. Eastern Standard Time. So why are big institutions like Uphold buying in the mornings? We see when you wake up, all of a sudden XRP's price is up. Well, because it allows the peasants and the peons to dump it throughout the rest of the day due to them taking profits on a small little pump. Like XRP's up 20%, and then they sell 10, 20, 30, 40, 50% of their portfolio, potentially even the whole portfolio. And then what the institutions do is they buy the dumped XRP the next morning, they rinse and repeat. Uphold already owns 3.5%-ish of the XRP held right now. That's $1.25 billion of this time when this was posted. This was 15 hours ago, of the $34 billion market cap. The market cap is now $38 billion. So these are not retail mom and pops and grandmas and grandpas and uncles and cousins and your babysitter your girlfriend's boyfriend that's buying these projects. This is whales. These are exchanges, guys. This is happening overseas, and this is happening because not only of the good news that's taking place for the lawsuit, but because of Bitcoin. Look right here. When you take the price and you multiply it by the circulating supply, you get the market cap. So if you were to make a price prediction for a project, you can determine what the market cap would need to be in order to hit that price prediction to give yourself a plausible strategy on which projects are going to be the best to hold. Now, I'm going to show you guys this in other videos, and also at the end of this video, what I look for on CoinMarketCap that you could look for as well too. But right here, when we saw Bitcoin rally from 29,900 some odd dollars all the way upwards of 34,000, and then we see Bitcoin continuously trading higher, that's 14.75%. This has been a $101 billion market cap growth in order to get 14.75% for Bitcoin. If $101 billion flows into something like XRP, that's a 300% growth. So does it make sense to have, if you're going to put, obviously you wouldn't do this, but hypothetically speaking, if someone were to put their life savings in Bitcoin, which is not smart, like you don't want to have more than 5 or 10% of your net worth in crypto, even if you are a macro bull. I mean, if you're young, you could take more risks. I like being a little riskier because I know how to make it back. So I'm not too worried about it all going to zero. But obviously, you don't want to invest more than you can afford to lose. But let's say you put in $100,000, $1 million into Bitcoin, and $100 billion flows into Bitcoin. If you had the same amount in something like an XRP and $100 billion flow in, you're getting a 300% as opposed to a 14%. So $100,000 put in at 30K goes up to 34K. You would have made $14,750. That's not life-changing wealth. So we take the price, 29,888, multiply it by the circulating supply, which is 19,533,412 of Bitcoin in circulation, and that gives a market cap of $583 billion. Then we see the price at 35,073 multiplied by the same circulating supply. Well, that's a $685 billion market cap. So in order for Bitcoin, to pull like a 3x, we need to see $500 billion go in multiple times into Bitcoin, which I believe will happen, but I don't believe we're going to be seeing 10, 20, 30x for Bitcoin. So it's important to have some Bitcoin. So the Dubai Financial Service Authority approved XRP under its virtual asset regime, allowing licensed firms in Dubai International Financial Center to incorporate XRP into their virtual asset services. So will XRP be used to bridge the oil money? I think it's very obvious what's happening here, because on the same day, the firm said it would start working with the National Bank of Georgia on the Digital Lari pilot project, which is their central banking digital currency platform. Hong Kong and Taiwan governments are already using the CBD service, which launched back in May. So institutions can use the platform to manage and customize the entire life cycle of the CBDC, which includes minting, distribution, redemption, and token burning. So central banks can issue both wholesale and retail CBDCs, which can make offline transactions as well through the XRP ledger. We're going to see XRP gain massive adoption, guys. Analyzing this recent rally, several factors are coming into play. First, the social dominance metric, which is an indicator of market sentiment. It's seen a significant spike, the highest since mid-July. This surge in social media conversations surrounding XRP is going to reflect the growing interest or speculative hype, which often precedes price movements, obviously, because these markets right now are moving based on marketing and social currency. And so when we see, people posting all over Twitter about the lawsuit, we see massive channels and media companies talking about it, the buzz starts to spread. And of course, that affects the project. And John Deaton posted, the people who argue that the SEC got a 50-50 victory in the case are 100% wrong. It was more like a 90-10 in Ripple's favor. So if Ripple ends up paying $20 million or less, it's a 99.9% legal victory. So the amount that says like $770 million, there is no way that that amount is going to be that large for Ripple to pay the SEC. Might be 20, might be 50, might be $100 million. Either way, they've already won. The game is over, guys. And now it's just a matter of time of when they flip the switch. It's happening right now. You're witnessing it. So I'm not going to tell you to go and FOMO into XRP right now, because we will see retracements. We will see volatility. We will see XRP correct on the way up. But nonetheless, we're trending upwards. So what's the big deal here? Okay, a US spot Bitcoin ETF is a massive opportunity because of the sheer size of the US capital markets. In fact, SIFMA estimates that the US accounts for a full 40% of total global fixed income assets in equities market cap. Moreover, ETFs in the US represent a greater percentage of total assets than in other jurisdictions, coming in at 7% of equity and fixed income assets versus 4% in Europe and 2% in Asia Pacific. All in that amounts to about $7 trillion in the ETF market, which is multiple the size of Europe's $1.5 trillion market and Asia Pacific's $1 trillion market. So looking at this another way, assets managed by broker-dealers, banks, and RIAs in the US total nearly $50 trillion. So it would just take just a tiny percentage of that amount managed, in brokerage assets migrating into a spot Bitcoin ETF to move the needle. What if just 1% or 2% of that, guys, flows into the market? Just 1% of $50 trillion is what, $500 billion? If 2%, let's say $1 trillion comes in the market, that's 2xing the entire market. So nonetheless, this is going to be big, and it's already happening. Another reason why US spot Bitcoin ETFs is such a big deal is because of its advantages over other trading vehicles and the resulting increased likelihood of greater adoption, right? Relative to spot, futures, proxy stocks, OTC traded trusts, and private funds, ETFs offer a unique and advantage combination of fees, transaction costs, liquidity, tracking error, and operational complexity, not to mention alleviating the need to figure out custody. Because if you're going to come in a big institution, right, and you're going to move $50 billion at once, you're not just going to go on Coinbase and place a market buy order for $50 billion and pay Coinbase's fee. You know, you're going to do some type of OTC deal, behind the scenes deal, and you're going to need to figure out custody so you don't have to worry about losing your crypto. So they are trusting companies like BlackRock, Fidelity, ARK Invest. And while Bitcoin futures ETFs have existed since late 2021, there are notable disadvantages to its futures-based construction, such as like tracking errors, tax inefficiencies, roll costs that will typically lead to material underperformance over time, making them more appropriate for short-term trading than a buy and hold strategy that better capitalizes on the benefits Bitcoin brings to a portfolio. So to put this simply, a US spot Bitcoin ETF gives Bitcoin legitimacy, eliminating regulatory uncertainty, giving credence to crypto as a legit asset class. So you'll no longer be the laughing stock of, the Thanksgiving dinner of your family. And now grandma and grandpa and your uncles and your aunts are going to start asking you about crypto again. And they're going to start wondering, hey, what are you doing? Tell me about this again. And that's when you know that a correction might be coming though. So get ready. I'm going to show you on the chart when I think the markets are going to crash back down and what to expect before Bitcoin's halving. So, don't let your emotions get the best of you here. I know it's exciting, guys, but a correction will be happening, nonetheless, when Bitcoin pushes up further. Just get ready for this. I'll show you. So check this out. All right, let's go over here and let's look at what's taking place over in Hong Kong, because the whole crypto community is excited about these overseas announcements, because the Hong Kong government reportedly is weighing in on the launch of a spot crypto exchange traded fund amidst the ongoing regulatory pushback, compared to the United States. Hong Kong has had their own regulatory issues, and the entrance into spot crypto ETFs would be a significant development and a move in the context of the economic confrontation between the US and China. And that's what BitMEX's co-founder believes, because he took to Twitter on November 6th, today, to express his excitement. And he said, competition is amazing. If the US has its proxy asset manager, BlackRock, launching an ETF, China needs its proxy asset manager to launch one too. So the US versus China economic war is great for Bitcoin. And the reason why is because, competition fuels innovation. And when you look at, over in China right now and you see, these massive companies competing with each other, what do they want? They want the market share to have their seat at the table in the new economic landscape, because we're shifting over from fiat currency over to digital currencies, CBDCs, and crypto is the new asset class that CBDCs are going to be integrated with. And so yes, CBDCs are going to, allow the government full control, just like the head at the Bank for International Settlements has said. They're going to have the technology to track and trace all of your payments, but at the same time too, it's going to allow a lot of capital to flow into crypto assets, because CBDCs will be used as a new form of stablecoin similar to USDC, USDT, to allow you to buy Bitcoin, and also XRP. So the US wants to be the first to launch futures-linked crypto ETFs. They were the first back in 2021, with Hong Kong following in its footsteps in late 2022 with the launch of a CSOP cryptocurrency futures product. Combining with the Samsung Bitcoin Futures Active ETF, Hong Kong has about $65 million in crypto ETF assets. So that's nothing. That's very, very small. According to Bloomberg, the futures crypto ETFs have seen low demand in Hong Kong right now, with their share still being tiny compared to other global funds, right? Asia Pacific is 0.2%, South America is 0.9%, Europe is 5%, and the US is 83.5%. So while people are arguing online saying that the US is behind in terms of regulatory clarity, the US is actually ahead in terms of investing dollars that are being dumped into the industry, because the US is different than the United States of America, right? When you start looking into it, you'll start realizing some crazy stuff. Like even Disney, the land that Disney, it's its own like sovereign nation. And so they were sued, and they actually won this lawsuit because Disney is like its own country in the United States. And so Hong Kong and Shanghai Banking Corporation, the biggest bank in Hong Kong, reportedly enabled its customers to buy and sell Bitcoin and Ethereum-based ETFs back in June of 2023. So while you're getting ready for the holidays. You just got done with Halloween. You still might be hungover from the weekend. All these institutions are now dumping money in while you're sitting there, trying to recover from the margaritas that you had, on Saturday and Sunday. So when we look right here, we go to the cryptocurrency sectors. This is what to look for, right? So XRP, going to do amazing. I'm bullish on XRP. Yes, I do hold XRP, but there are other categories that I think are going to perform very, very well. So you see here, right here, memes. Meme coins are going to go crazy on the final stage of the bull run. This is when the euphoria stage really kicks in and we're in like maximum greed. I expect meme coins to be skyrocketing. So we'll keep a lookout for that. We'll let you guys know, which projects are, obviously you see like Shiba Inu, Dogecoin, those two projects are going to see the majority of the influx because they're larger market caps, but then there's smaller market cap meme coin projects. For the degens, they're going to go crazy. We see based ecosystem. Let's see what else in here. All right. So sharing economy, video, play to earn, massive. Gaming, play to earn. These two categories I think are going to be like top 3. So we'll go into gaming right here and we'll open this in a new tab. And I'm going to show you guys something that we're going to look at on the chart here. What happens when we compare the total 2, which is the crypto total market cap, excluding Bitcoin. So it's every single altcoin. And we compare that to Tether and what that looks like for the altcoin market cap. So when we go back here to this sector, the largest market cap projects in the gaming are all going to do well. You could blindfold yourself. You could throw a dart at any of these top projects and you're going to see gains. You're going to see some growth if money flows in the market because these portfolio capital companies, they diversify amongst the top projects. So if you want a safe, if you want a secure play in terms of this bull run move, you got to hold some large caps, right? So IMX, Render is going to do amazing. Axie Infinity, will do well. The Sandbox will do well. Mana will do well. ApeCoin, Gala, Engine, all these projects are going to do well. But when we start digging down here, we see these projects with market caps of like $40 million. You see Alien Worlds. You see GameFi.org. Games for a Living, $45 million, sitting at 3 cents right here. So a project like this, yeah, it might not be doing too hot compared to the large caps on the weekly. It's 14%. I mean, you're not getting that in the stock market right now. But a project like this is a runner in the later stages of the bull run because the large caps, they move first. That's why we're seeing 32% for IMX, whereas the other projects down here, down the list, are only moving like 9%, 7%. I mean, some of them 34%. So arguably, the smaller caps could be moving first, like some of this one, 41%, but they're riskier, right? So when you deal with a project that has low trading volume right here, you have to look at multiple things, okay? So the multiple things that we're looking at when I click into a project, like for example, Decentral Games right here. Okay, don't buy this project. This is just an example. One thing that I look at is, number one, I look at the market cap of the project, all right? I don't look at the price. So many people look at the price and they're like, oh, I want to find a low priced project, which doesn't mean anything because it's all about market cap. It's all about volume. It's all about circulating supply, the max supply, the fully diluted market cap. So you know that VCs aren't going to be able to dump that much on you. So for example, like if I'm going to look at the market cap, I see that it's at $11 million. The first thing that tells me is this is a risky play, obviously. So I need to do more research on the tokenomics and I need to look at other stuff. But let's look at the fully diluted, 15 million. So what's the difference between the market cap and the fully diluted? Well, there's a $4 million difference, meaning that when venture capital money is raised for a project, they get locked away, get staked away, and then that amount can get unlocked over an extended period of time, and then they have the ability to sell that if they want. So for example, if people come into a project during the launch stage and they put in like $5,000 or $10,000, and then that project is worth, let's say $50,000 or $100,000, and it gets unlocked, well, you want to make sure that the fully diluted market cap is as close to the market cap as possible. Because if I came in here and I saw that the fully diluted was like 150 million compared to the market cap at 11 million, that's a massive red flag because that means that it would face price suppression from the VCs and the early investors selling off, when their tokens get unlocked. So there's token vesting periods, there's unlock schedules, and that's where we can do more research into these projects. But this is a good sign. It's only a $4 million difference. Now, I also look at the max supply, and I see if the max is 1 billion tokens, I want to make sure that as much of the circulating supply is on the market as possible. So if you're seeing 70%, 80%, or 90%, that's a good sign. That's a very, very good sign because it means that, they can't just release a massive amounts of tokens, which affects the price, right? Because when we go back here and we look at Bitcoin's chart, and if you want to do a price prediction, you take the price multiplied by the circulating supply to get the market cap. So if you were to take a price prediction, let's say you take $1 and you multiply that by the circulating supply of, for decentral games to get to $1, what would that take, right? What would it take for it to pull a 50x to get to $1? Well, you take the price prediction, which would be $1, you multiply that by the circulating supply, which would be 740 million. So that's $740 million market cap. So in order for a project like this to pull a 50x, it needs to go to 740 million. Now, with the amount of money that's flowing into the play to earn gaming space, I could see something like that potentially happening for a project like this. I mean, you look at you see the all-time high for this project was at 50 cents. Not too shabby, right? I click on market cap. Sure, it's down right now in the gutter, but $200 million market cap. So if this just goes up to half of that, to $100 million market cap, that right there, was it 34 cents in the past? Depending on the circulating supply, it'll be different now because you have to take the current circulating supply, because we go back here. Let me give you an example, right? So I'm going to talk slow so you guys understand this. All right. So at the all-time high for this project, it was $200 million market cap. Now, if we go to $200 million on this again, what would the price be? Because the price at 200 million was roughly 52 cents. Well, what I would do is I would take the calculator and I would take 52 cents. So you go, and you can do this with me, 0.52, and you multiply that by the circulating supply. So 52 multiplied by 740,293,737, right? So 740 million. It would need a market cap of $384 million. So why would it need a market cap of 384 million when it only needed a market cap of 200 million to get to the same price? It's because there's more in circulation right now. That's why it's super important to have a large percentage of the max supply in circulation. In this case, it's 74%. And then I also look at the market and I see where it's listed on. The more exchanges that a project's listed on, it allows for more liquidity. But also, it's not a bad thing if they're not listed on that many exchanges because, let's say it's on Uniswap and it's not on Coinbase, it's not on Binance. But if a project like this gets listed on Coinbase or Binance, then you're essentially in early before it takes off and it goes. So again, don't buy this project. Don't put any money into this. Don't sell this thing. Just look at it as an example for what to look for, because we see, a chart pattern that's like falling wedges for a lot of these projects right now. And again, guys, if you want to see the top altcoins that we're the most bullish on, you can go to bullrunners.com, click the button, enter your best email address. You'll get access to our private Telegram group. You also get on the early bird list when we launch our financial education platform. And we'll send you that list when it's out. You guys will see which projects we're bullish on. And that doesn't mean you should buy them. That just means what we're bullish on and what I'm buying and I'm backing up the truck for. So you can do your own research. Educational purposes only. But right here, let's give you some more education. So what happens here in these markets is when we are in a bear market, people hold more onto Tether and USDC. Tether is a stable coin, right? It stays around $1. But when we look at the market cap dominance, this determines the percentage of the total market cap of the industry, what percentage of that is in USDT at any given time compared to the rest of the market like Bitcoin or Ethereum. And so when the market cap dominance is higher for Tether, then that means the money is flowing out of altcoins and out of Bitcoin. So we're in, sell-off periods. We're in bear markets, right? So right here, when we look at the chart on the right-hand side, the total market cap excluding Bitcoin, when the market cap grows by the billions of dollars, right here you can see on the 26th of March 2019, well, Tether saw a drop below the 20 moving average right here in blue. So this is the 20 SMA, right? When we saw Tether drop below the 20 SMA, we saw the market, the altcoin market, rally upwards of 150%. So when Tether dropped below the 20 SMA, we saw this rounded bottom right here. When Tether broke above the 20 SMA, that's when we saw the altcoin market correct to the downside, right? So now right here, we saw Tether was on a rally in terms of percentage all the way up to 5% of 4 to 5% of the total market cap dominance. Then we see right here on the left-hand side of the screen, Tether dropped below the 20 moving average. We see another dip below it, another rounded bottom. So what happened right here? Well, the altcoin market saw a massive rally. We saw it rally upwards of 800% to 1,000%. That's a 10x for the entire market. Whereas Tether was seeing a massive sell-off to the peak right here. Once we pushed back above the 20 moving average and the 50 moving average, that's when the top was in for May of 2021, right here at this exact wick. And so we can predictably know when the altcoins are going to rally based on Tether's chart. So right here, again, on September 22nd of 2021, we saw the same thing happen again. Tether dipped below the 20 moving average right here. Simultaneously, that's when we saw the market's bottom and we saw the altcoin market rally 53%, right? So what happened over here on the left-hand side? I'm bouncing back and forth between the left-hand side and the right-hand side of the screen, but you can see the vertical white line moving, so you know where I'm at right here, okay? So once we saw Tether break above the 20 SMA right here, and it kind of bobbled around it for a period of time from the 3rd of December until the 13th of January. Well, where were we on the chart? We were turning around and going back to the downside. So we saw the markets top out, and then also we saw the total 2 drop below the 20 moving average right here for the bear market, right? So we were in a bear market, and simultaneously Tether's dominance went from 2.45% all the way upwards of 9% to the bear market. And now the bear market is over. So you can see that Tether has been losing strength in terms of dominance. We saw the high right here in the 18th of June, and now we're seeing lower highs. We see this resistance right here. And also one thing that's interesting in this wedge formation, we saw a break in the symmetrical triangle right here on the left-hand side for Tether. We saw a break to the downside just recently, right here. Okay, we broke below the 20. We also broke below the 50. Now, this could also be a fake out. So this is where you need to be careful here, because we could see Tether just bounce right back within this symmetrical triangle right here. And this could be a fake out where we have more to the downside. But one thing that's interesting is we're about to see a cross on the 50 moving average right here on the right-hand side of the screen and the 20 moving average right here to see a cross. The last time that we saw something similar happen, we didn't really see a cross. We saw them ride side by side, but was right here before the massive bull market rally of 2021. And so we're about to go absolutely insane if Tether continues to the downside and we see something like this take place, where we see another rounded bottom for Tether. Simultaneously, right here, we're seeing the altcoin market break out at the exact same time right here that we see Tether dropping right here. And so that's why we're seeing altcoins go crazy. Now, to the extent of how far down Tether will go and how long it stays below the 20 moving average and even the 50 moving average will determine how long this altcoin market rally goes for. And so we could see, the altcoin market push up from this period. Let's say if we did a 60%, we'd be at 785 billion. If we did an 85%, we'd be at 900 billion. So I honestly feel that we could go all the way up as long as Bitcoin stays bullish, leading up to the approval of some spot Bitcoin ETFs within this range right here. So we could go all the way up between, 800 billion to $1 billion for the altcoin market before we see a correction. So leading up to Bitcoin's halving, we could see the altcoin market push up here. Then we see a sell-off come and a consolidation period for an extended period of time. Then 6 months after Bitcoin's halving, which would be right around April, right? April of 2024. So usually we see a rally upwards into Bitcoin's halving. And then when Bitcoin halves, we're seeing it sell off into the halving and then consolidate for 6 months after the halving. And then we go 6 months to 12 months after the halving right here. So this right here is what I expect the altcoin market to look like. Because in terms of Bitcoin runs, the altcoins run. We could analyze this even more and say, like, will Bitcoin run first or will XRP run first? It's like one day Bitcoin might be up more, then Ethereum, then XRP, then Chainlink. Ultimately, being on the sidelines is the riskiest play. The people are like, what's riskier? Is it riskier to hold XRP, Ethereum, Chainlink, Solana, Bitcoin, or low caps right now? It's risky to hold nothing. I think there's less risk right now in terms of the potential for upside in the altcoin market. The safest play in the altcoin market is, XRP, Ethereum. I do think Ethereum is going to do well. I do think Ethereum is going to start outperforming Bitcoin here soon because Ethereum is about ready to break out. And you guys know what that means. When Ethereum starts to do well, all of the projects that are built on Ethereum's blockchain, now Ethereum has that liquidity for people to start going trading on Uniswap and decentralized exchanges. And so there's some DEXs out there that I think are going to perform super well over the next 1 to 3 months before the correction happens leading into Bitcoin's halving. So if you guys want to see a list of not only the top gaming projects, the top metaverse projects, the top meme coins, the top decentralized exchange tokens, the top centralized exchange tokens, the top storage, privacy, all of that good stuff, go to bullrunners.com. Get access right now. Put your email in. It's free to join our Telegram, guys, and we're going to give you access to our list. And also, when we launch our financial education platform, you guys are going to have the best information to prepare for the worst that's yet to come in this economy, because we're going to have some type of crazy crash. No one knows when it's going to happen. It might be 2026. It might even come 2024, but it's coming nonetheless, and you have to be ready. So right now, as a human being, you're the only species that has to pay money to live on this planet. So you have to purchase your freedom. Every other species that's alive gets to live here for free on our dime. So your dogs and your cats are freeloaders, all right? So you got to pay for them. Your dog wants better food. Your cat wants better food, and your children want better food. So in order to put food on the table, you're going to have to do it through crypto. So how do we do that? Well, we back up our truck all the way to the bank. We grab the bags, we pack them and stack them. We leave no bags left behind because the spending power of the dollar is going to continue to go down in value. That's a fact based on inflation. Blockchain technology, distributed ledger technology, and cryptocurrencies are going up in interest. That's the truth. And together, we're going camping on the beaches of the moon. I will see you on the next video. I will see you on bullrunners.com. As always, you know what to do. Stay bullish.